Welcome to the Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bobby Iaccino. We are also together with Mike Arnold at unfilteredinvestor.com. Bobby, last time we talked, last week, I was sick and I did the garlic thing and we were talking about the pros and cons of it. So for 3 straight days, I chopped up cloves of garlic and ate them like pills, 3 each day for 3 straight days. The cold, which was bad, lasted for 3 days. Okay, that's not nothing, right? That's a big deal that you can knock out a cold.
Not nothing, but you need a control group, and you got to remember you're healthier than 95% of the people out there. So I need to see a fat guy do that.
Okay,
chop up 3 days of garlic and get healthier.
We got
to. I do it too, dude. I do it too. So I do it also.
I'm going to keep doing it. To me,
it's one of those things. I smell like garlic anyway, so what's it hurting?
So you might as well. Okay, usually we talk for a minute or two about markets. Today's episode, I want to do a little bit of a deeper dive into crude oil and some of the industrial metals, things like that. So let's bring in one of our favorite guests right away. As I've said a million times, you guys can listen to Bobby and I for the last 20 years and think we're full of shit. Sometimes we do too, but you cannot deny the fact that we get great guests and they keep saying yes. Let's bring on Carley Garner of DeCarley Trading. Carley, how are you?
Hey guys, good to be here. Thanks for having me.
Good. I got a couple Vegas questions real quick first, because we were there 2 weeks ago, and I was actually like in my mind, I was thinking, should I call Carley or even Jeff Carter, who's running for treasurer of Nevada? But I didn't have enough time. It's bang bang. We were there for concert. We are going back in July for 3 days. So tell me this: if we want to spend a day like hiking and biking and things like that, it's not far from the Strip if we're staying at the Palazzo, right?
No, absolutely not. And so I will say you should have called me. I know trips to Vegas are quick. I forgive you. I totally understand. But next time, call me for sure. We could hang out. And if you are into outdoorsy things, very, very close. Red Rock is probably 10 to 12 miles from where you were staying. And Red Rock is basically a park with kind of bike trails, hiking trails. But most people bike just on the road because it's a one-way loop road, scenic route. Honestly, you would love it. It's really, really great.
If you want July, we'd have to go pretty early in the morning, right?
To beat the sun. Yeah, you don't want to be out there in the middle of the day. Middle of winter, you can get away with it. Any other time, no. But if you're here in the summer, we can go on the mountain, go hiking, and it's beautiful up there.
Okay, we're staying 3 days. I will call you this time when we go. I'll text you and we'll set something up, because you'll like my wife too. She's a lot of fun. She loves to hike and bike too. So
perfect. Good.
Yeah. Bobby?
I saw Carley last time I was in Vegas. We had drinks, different priorities, I guess.
No, I was there. Friends invited us, and it was bang bang for a concert. So yeah,
I'm comparing the hiking to the drinking. That's all. We didn't have that many. I'm exaggerating.
Oh, those are the priorities. Okay.
Yeah. I'm exaggerating a little bit. Not the priority of not seeing Carley. Of course, that's a priority. So I want to talk to you. I want to get right into it. I know Jim wants to focus on gold. And just a little background for you, Carley. Jim said about 10 days ago, I would say, that he wanted to buy gold and he wanted to know what I thought. And I said,
crude, not gold, crude.
I'm sorry, crude. It was crude. And I said, I wouldn't buy it yet. And knowing Jim, he probably bought it anyway. And I now would buy it like I like the chart. So before we get into the deep dive that we promised everybody on X, I want to talk to you about gold. First of all, the new Fed chair. You know, Walter Bloomberg is on Twitter.
I do.
Got a big following. He put out something about an hour ago. It says, Trump says he thinks Warsh understands he wants lower rates, would not have gotten job had he said he wanted to raise rates. So this apparently is a quote from Trump. One time I asked Walter Bloomberg when he posted something, I said, source? He goes, I'm in the room. So I felt pretty stupid about that. But
pretty good source.
When I read that kind of a thing, and I start to look at the reasons that I bought gold in the first place in November of 23, I can't see a reason to sell it. So what I'm asking you, not a long-term reason. So what I'm asking you is based on the charts, because I know you do so much analysis. What do you see in precious metals in general and gold specifically?
Well, I mean, for full disclosure, I've been not on my top game in metals this year. They took me by surprise with this crazy rally. That said, I mean, I have a lot of reasons to think that what unfolded, and I think it's a lot of it's market dynamic. Well, let's just say market structure. For example, I think ETFs kind of blew up the market last week, similar to what we saw in wheat a couple of years ago, crude oil in 2020, and then again in 2023. So there's a lot of weird things going on in the metals. And in my opinion, they're kind of broken. But with that said, I'll just say two things. I think the Warsh appointment, it changes the psychology. Maybe it's a bit of a psyop, if you will. Going into that, everybody kind of expected things to be, go with the flow, keep the big balance sheet, weak dollar policy, that sort of thing. And I think this kind of questions that big narrative of the debasement trade, in my opinion. And when I take it to the charts, the most important chart for me when I talk about gold and silver is the US dollar. The weakness in the dollar, we sold off obviously early last year, and then it kind of got stuck in the mud and didn't go anywhere. But the fact that it didn't recover allowed this narrative to really grow and become, in my opinion, a little insane. And the narrative was, the dollar's weak. The dollar will continue to be weak. It's not worth owning. You don't want to own anything dollar denominated. So let's buy gold, silver, and basically anything else. And I think it grew into this big monster and allowed that to occur. So with that in mind, I look at the dollar chart and I see it in 2023-ish, we had kind of a triple bottom off of a weekly trading channel. We're on the same channel. We're putting in a triple bottom, and right when we got out our next share, potentially, I should say, the market bottom off that and started to rally. So I think this would have happened anyway. This just happened to be a timely, good excuse for that to occur. But this is against the grain. Maybe it's completely crazy, but I think the dollar's probably bottomed for now. I think we return to the high, like 105 to 110 area. And if that happens, nothing else matters. And gold and silver are going to have a really hard time going higher. In fact, they probably go much lower. If I'm wrong, then the opposite's true. But I'll go out on a limb and say I think there's probably a 70-80% chance that the dollar has seen its bottom and moves higher from here.
So based on that, I was looking at the Japanese yen today and how it just continues to weaken. It did have, a little bit of a rally from about January 13th or so. I think it was maybe 4 or 5%. I'm not sure, but it's dropped about 3% since then. I was looking at the summary of opinions from the BOJ, and to me, they leaned hawkish. Then I was looking at their data, and their data was pretty much stronger across the board this week, at least. Their money supply was lower by 9.5%. Their manufacturing PMI was above expectations, further into expansion. Their services PMI above expectations, further into expansion. When you analyze currencies at all, does the yen come on your radar? Or do you have any opinion on why, in my view, it's moving against what everything says it should be doing?
You're right. It is doing that.
It's just because it's the damn yen? Is that why it is?
The yen has been really, really odd. I mean, I'm old enough to remember when the yen was considered like the safety currency. And so when anything went wrong in the world, people bought yen. And now it's literally the exact opposite. I think maybe the sentiment in the yen might actually be worse than it is in the dollar. And that's really hard to do.
Yeah. By the way, can I add something about the yen real quick that you guys haven't hit on? I just want to make sure before you finish your answer. I thought you were done. I'm sorry. But that big spike from about a week and a half ago was when both the Bank of Japan and the Treasury called around to different currency trading desks around the world, asking for a rate check, trying to scare people into think there's going to be a coordinated effort to buy the yen. And we did have like a 3% spike, but we've since losing that. Carley, finish. I'm sorry I interrupted you.
Well, real quick, it was a 4.69% spike. And you would think that if it got back to that same level, which in the future is about 63.04, that they would actually act, right? In theory.
But it's going back there. It seems like it's challenging it again. Yeah.
Go ahead, Carley.
It is. No, look, the yen trends very, very, very well. And it's hard to stop that monster. I will say that I think the reality is at some point, the carry trade's not going to make sense anymore with dramatic changes in interest rate differentials. I think at some point it's not going to make sense anymore. And maybe that will be kind of the catalyst to reprice other assets. So we'll have to wait and see. But if you remember a couple of years ago, when we had a kind of a yen carry trade unwind, shook the stock market, at least for a couple of days, not forever. It wasn't the end of the world, but it caused some waves. And I think we might see something down the road similar to that. But to be fair, the yen has been a really, really tough trade unless you're just short and holding it. But the problem is every once in a while we'll get these real big rallies to knock everyone out. The way we're playing it, not that anyone cares, but we're basically buying many yen and then buying puts to protect it so that we can, if it just keeps going down, we eventually end up being net short. If it goes up, we're good. We're hedged either way.
So it's kind of like a straddle. You just want, if it moves beyond a certain amount, you'll start making money, right?
Correct. Right. Yeah. Big move one way or the other. Hopefully we.
So here, I got a quick pushback again, and I want you to respond to this real quick. Is that we talk about the dollar, and in the dollar in everyone's head, it's the dollar index, which essentially is about 70% the euro versus the yen. We all know the yen is shit. The yen is, they're trying to shake off decades of problems, and they're having a difficult time doing that. Europe has done some of the stupidest things I've ever seen in the last 5 years. So it could be that the dollar is an illusion of strength against two currencies that are so incredibly flawed. But I do know that markets trade off the dollar index regardless of what the relationship is. So how do you make sense of all that?
No, you're right. I think we're kind of the least dirty shirt in the hamper, right? That's the way I describe it. It's, so it is what it is. But if you remember a couple of years ago when the euro dropped below par, nobody was calling for the euro to get back to 120. So we have to keep in mind when markets are moving relentlessly in one direction, those narratives are overwhelming and they're convincing, but they're not permanent. They're temporary. And I'm just wondering if maybe the weak dollar trade has kind of run its course, and the narrative is like, even if I call my mom and ask her, she probably would tell me the dollar is weak. And you know what I mean? It's just one of those stories that have gone for so long and everybody's positioned themselves. And I think we're due for a little bit of a surprise here.
We used to call it the least showered Italian at the block party on Central Avenue. There's always the version.
That's a lie.
No, that is a little bit of a lie. So if you think silver was crazy, I'm sorry, if you think gold was crazy, I just gave away the question. Silver was absolutely batshit. Now, I've talked about this on this show a lot of times. I don't often trade silver because every time I've done it, I've lost money.
Yeah.
You're always looking at commitment of traders. I had a fellow trader, a guy I really respect, say something to me recently about silver. It's actually a few days ago. He said it wasn't that stretched in long positions, according to the COT. Do you agree? I mean, it doesn't make sense to me to think about it that way.
Yeah. So I'll be frank. I haven't looked at the COT in silver for a while, and here's why. I also stay away from silver. I don't recommend it to my clients, and it's really honestly one of the crappiest assets on the entire board. Like it goes nowhere for a decade or two, other than just stopping people out left and right. And then it makes its move all at once after everyone's out of money, or, a few people catch it. But honestly, it's just an awful market. So I don't recommend it. I follow it and chart it just because people ask me about it. But other than that, don't follow the COT close enough to say. What I can say about silver is, just like anything else, in commodities, we've seen these like rolling parabolas for the last 3 or 4 years. And it's one by one, it hits different sectors and then it comes and it goes. We've seen it in cocoa. We've seen it in coffee. We've seen it in wheat. But commodities always commodity. They're boom and bust. And I know there's some really good stories out there about silver being a precious metal in addition to industrial metal. But the reality is there's substitutes. It's not at the end all be all for anybody that's actually using it for purposes. Anyway, I'm not convinced that this time is different. I still think silver probably gets all the way back down to where we started, or somewhere around 40, maybe even a little bit lower. I wouldn't be shocked if 5 years down the road we're looking at $18 to $20 silver. If you look at a giant monthly chart, the bottom of the range is about $18, and silver is the market. It's like where hopes and dreams go to die, and I think that's probably what's going to happen here, unfortunately.
Bobby, what do you say to that? Because I know Bobby's never liked silver too. I've been more the silver bull over the last few years than Bobby.
I'll tell you exactly this. I bought a 100-ounce silver bar in late 2007. I think because I went to Las Vegas and I had like $11 left, and silver was like $11. So I said, to hell with it, right? I just went and bought a 100-ounce silver bar. By 2008, it was worth $8. So I was like, be perfect. That's absolutely perfect. That's what I think of silver. It has been a doorstop in our spare bedroom ever since. And the other day, my wife said, has this gone up too? I'm like, put that away somewhere.
Yeah,
It shouldn't be a doorstop. It's worth about $9,000 right now.
It's crazy.
Yeah. Also, for those of you who don't know, parabola means similitude comparison. It's from the Greek root. I had to look that up.
Yeah.
What you use it as is when a chart goes parabolic, it tends to reverse.
It has a geometric meaning according to the Oxford Old English.
Yeah.
Go ahead, Carley. What were you going to say?
No, I was just saying it's just super uncivilized, and it's honestly unfortunate in my opinion. I'm gonna kind of go on my soapbox here and
please
mention commodity ETFs. I really, really, really despise commodity ETFs. In the case of gold and silver, the ETFs are they're not buying futures; they're actually holding physical metals. But the reality exists. When we're talking about commodities, they're not deep like the stock market is. So if something goes meme stock or viral or whatever you want to call it, and everybody, with a cell phone is getting dinged and alerts about silver and gold or whatever the commodity is, if everyone decides to buy an ETF, there's no, like in the good old, I'm not going to say good old days. That's not the right way to say it. When I first got into this business, if somebody wanted to participate in the metals, they could buy bullion or they could open a futures account, but there were processes in place to make sure they understood what they were taking part in. There were risk disclosures, all these sorts of things. But nowadays, anyone with $500, $600, $700 in their account can buy an ETF. And that's great. I love that it brings retail traders to products more conveniently. So I see the appeal, but there's some consequences to that. And the consequences are, if everybody in the world was to buy a little bit of gold, silver, wheat, whatever it is, there's not enough of that commodity to go around. The commodity markets can't absorb the massive liquidity that comes with the popularity of this type of viral sensation, and it blows up the markets. And we've been seeing this for the last 5 years. We've seen it literally over and over and over and over. And as someone in my business, it's becoming very, very frustrating because it takes away the market integrity and it's taking away from proper price discovery. I mean, we all expect volatility and risk when we're dealing with commodities. I'm not saying it should always be easy peasy, but it's gotten to such an extreme that it's just almost impossible for brokerages and traders and everybody to handle.
Okay, can we switch over to crude now?
Yeah. Let's do it.
Let's do it. Bobby, you want to put up a chart or no?
Sure, I can do that.
Yeah, because
start your questions while I do it, please.
So, Carley, like Bobby said before, I think crude's been just beaten down too far, too long. I actually do believe there's going to be an economic resurgence that's going to be happening in 2026. And I could back that up if you wanted me to. I might not be right, but I mean, I think there's real reasons in place that it could be doing very well. So I started buying crude and crude names again. I think it's, somewhat of a contrarian play. What do you think of crude?
So I agree with you that there's lots of reasons to be long crude oil. I mean, there's underinvestment. There's, it's been holding the line at 55 very well each time we've fallen down and tested that. If you look at the COT report, speculators in crude are almost always long. And right now they're the least long they've been almost ever. So there's lots of reasons to be bullish oil. I'm not going to argue with that thesis. But what I will say is this is the fourth bear market in the last 20 years. And the first three bear markets ended very, very poorly. They didn't end quietly like this one has. I don't think it's ended. But if that was the end, the other three didn't end this nicely. There was some sort of washout before we were able to put in a bottom, lure buyers, and get the uptrend moving. So I actually think this is just kind of a temporary bump. As long as we hold the low 70s in oil, I think this is kind of par for the course over the last 4 years, which has been, we get these nice, quick, sharp rallies on geopolitical news, and then we give it all back and a little more. And I think that continues. So I could be wrong, but I'm still in the camp that thinks crude oil at minimum sees 40. But if we get a repeat of what we saw the last three cycles, we're talking maybe a really quick round trip down to $15 to $20 and then back.
Wow, Carley dropping some bombs there. Bobby, what's your fundamental take on this?
Fundamentally, I think it's really it has more to do with Iran than anything, because to me, there's no fundamental reason for an oversupplied market to have made this move.
Right.
And it is still oversupplied. Now, Scott Besson today said that our GDP is around 4.1%. I don't know where he got that, if that's from the Fed compilation or it's his own numbers. That's massive if it is, but the rest of the globe is not there. Specifically China. India is talking about not buying Russian crude oil. I don't know how they do that. I mean, we've seen it before. Russian crude oil is going to make its way to market one way or the other. China needs more crude oil than they buy from Saudi Arabia or Russia combined, so they can just shift and buy more from Russia. They're not fungible, right? The different types of crude oil mean something. But there seems to always be this sort of rolling way to get Russian crude oil to market. Having said that, this is just something technically, and Carley, I don't think we've ever talked about this, but Mike Arnold and I did about 20 years research on double bottoms and double tops. And this is not a double top yet, but it's a potential double top. Now, we look at the two tops, they need to be basically within 25 basis points of each other. So if I take the same tool and I go here, and then I go down to what I consider to be the base, okay, this high has to have at least reached the 0.75 retracement without exceeding the 0.125 retracement, okay? Really simple stuff. And if that happens, it moves the probability up somewhere around 7%, right? So like from about a 58% probability to about a 65% probability of getting at least to the 175, right? Which would be
giving it to the 175. What does that mean?
57.10 would be the drop if we get a close below.
If it closes below that low, right?
The February 3rd low, right?
Yeah.
So obviously, I'm not trading a pattern that is a potential pattern, right? It's just I like to keep an eye when these things happen, because when they happen, it gives me at least a little bit more confidence in what Carley said about this being a short-term bump is not just possible, it might be likely. It wouldn't change for me unless we got somewhere up around 69 or so, where then the pattern becomes invalidated and it doesn't work. And if you look at where the final measured move target of this 55.76, which is the area that Carley said is held, and that would be a good place for it to break and not end well, like she just mentioned. So I'm just putting a lot of what ifs there. I just don't think there's a reason for this rally. Having said that, I really like this price action, Jimmy, for the short term.
Yeah.
Breaking through the 200, testing it and holding it.
200. Yeah. That's when I started getting more bullish, is when it went back and retested the 200 and it held. And so then I started putting again, and I went to buy XOM, ExxonMobil. And I don't know if you've seen that chart. That's already gone through the roof. So that's why I kind of dialed back to something that I thought looked like it was in the beginning part of its move. And that's why I went with, what did I call it? What did I say? XOP, right? That's the one I'm talking about. That's the explorers and exploration. Yeah. Because I confuse COP is yeah, that's the one I bought early today. So that's not bad. Okay. So
keep
far,
in mind, just one quick thing. The crude oil has done what it's done over the last year or so, with the dollar mostly trending lower. If the dollar starts to trend higher, crude oil is going to be one of the biggest commodities impacted, and that's going to higher dollar alone, without all else being equal, pushes us probably back below the 55 and into the probably into the 40s.
Okay, so this is interesting, because it seems like you are kind of your distaste for commodities is broad, and most of it is hinged to the fact that the dollar seems to be strengthening and could have a decent run. Yes. Let's get a dollar chart up and see what the technical analysis on that. Is that cool, Carley?
Sure.
You want the index?
Yeah, I guess so. That's all we got, right?
That's all we got.
Yeah.
It should be noted, though, the correlations between the dollar and commodities, like in the really big picture, it's higher dollar, lower commodities, vice versa. We took a couple years off from that. Like when Russia invaded Ukraine and all kinds of weird things started happening, that we kind of had a break from the normal correlations. But from what I can see in the data, we're starting to trend back into those normal negative correlations. So again, if the dollar surprises to the upside, it's going to be really bearish for a lot of.
So Bobby, if I know yours and Mike's technical analysis, I would say that you look at this chart and you say not yet, right?
Yeah. I mean, to be honest, in this kind of a chart for me, I don't ever trade the dollar index. I trade the individual currencies. But I've got a similar situation where in this particular chart, if I get a break below this sort of best fit trend line, I don't ever draw these exact, right? I just draw on sort of a trend, then I'll go ahead and, I mean, I won't because I don't trade this, but if I were to trade this, I would likely go to a, let's say it goes to here. Actually, that's wrong. Let's say it goes, I hate when I do that.
Yeah,
let's say that this is the peak. Then I'm basically looking for this kind of a move lower. All right. So basically these stages, and my actual target would be this 0.625, which would be about 95.26. That'd be a short-term trade, obviously.
Yeah.
So all of this to me is very reliable resistance, but I also don't like looking at it on the dollar index because I'd rather look at the dollar euro and dollar yen individually, personally.
Okay. Can we take a quick time out real quick? Luis, will you put the banner up? This is the time of the show where I ask you guys for a favor to us, and that is to try Tradier Pro for 3 months for free. We talked to options traders who've been doing it for decades and others who've been doing it just for days, and they all say the same thing. Regardless of what your level is on options trading, this is the spot to be. So just scan that QR code. It is 3 months for free, no obligations at all, and then you can decide if you'd like it or not. If you're not interested in a new trading platform, just do it for us because it makes our numbers look good, and Tradier loves us more. Bobby, back to the show.
So let me add, this is a political question for both of you. And Carley, I know you don't love these.
I don't know anything about politics.
Yeah, anyway, let's go. Well, you know, this is policy guiding toward markets.
Yeah.
Trump said he would not have appointed a Fed chair who wouldn't be interested in cutting rates. That's me paraphrasing it. He also does not want crude oil to go up, right? So if we believe that, what power, if any, does he have other than pressure on Saudi Arabia? Nothing, right?
Carley, you take it first.
Well, I am of the opinion that I don't think lowering the interest rates are really going to overheat any commodities or stocks, and I'll say why. I think most of what we're seeing with higher asset prices, and even the fact that crude oil is as high as it is, I know we feel like it's low because we were at 130 a few years ago, but in the overall scheme of things, $70 crude oil is not cheap. Most of Trump's administration on the last round, we spent below 75. So with that said, I think, I mean, I know Fed independence, I know all that kind of stuff, whatever, but I think the reality is, I think the goal will be to shrink the balance sheet, pull money supply out of the system. Because in my view, and I know this is kind of simplistic, but I think it's really most of the problems we're running into with inflation and all those things are simply a matter of too much money chasing too few goods. And so I think if we focus on balance sheet and money supply, it doesn't really matter what interest rates are. I think interest rates can go lower without overheating things. And I also think in the big picture, I think the way the administration is looking at it is low interest. Well, let's just say this: high interest rates are making the rich richer. Rich people earn interest; they don't pay it. But if you keep interest rates high, it thwarts small businesses from, investing. It keeps consumers that are borrowing just to get by. It puts them on their back feet. So I think the goal is lower interest rate, less money in the economy. That's my thought.
So I think of it a little differently. And Bobby, Carley said something that kind of encapsulates what I think. You said that oil really isn't low from a historical sense. It's just low compared relatively. And I think if you throw in the fact that everything else has rallied so much based on the debasement trade and the weak dollar, that crude is even perceived lower than it actually is. I don't think Trump minds crude going up to $70. I think Trump minds crude going up to 75, 78, $80. I think that's when he starts to get a little nervous and will start putting pressure on Saudi Arabia, et cetera. Are they scared of him? I don't know. There's been some things that, and Bobby, I'm going to throw the question back to you because there has seemed some times where they've made moves that seem solely to please Trump. Do you agree?
Yeah, I would agree on that. I mean, I think that I was just going to go into free spoke Type in, has Trump ever said what price he likes in crude oil? But there'll probably be 92 answers. He definitely likes when the frackers, the horizontal drillers are making money and hiring people. He likes that.
No doubt.
So I just flat out would agree with you. I mean, I think that he, as long as things aren't getting out of hand and the price at the pump isn't getting too high. I mean, he thinks they're $1.85 everywhere. I haven't even seen them below $3 here in Florida, but he likes when gas prices are down. And I agree with you, Carly. I don't think that things are overheating. I did put, Luis, can you put up my screen for a second? I think I found Atlanta Fed GDP. Let's see. I looked for Atlanta. Yeah, here it is. No, that's not it. Atlanta Fed GDP is tracking at 4.2% right now.
So that's where you got it from, right?
Yeah, so that's where he got it from. So looking at it from that perspective, you're likely to see a little bit of a bump up in crude oil, but again, I don't know if it's sustainable because I don't think the rest of the globe is doing anywhere near this. I mean, the EU just celebrated 0.3% GDP. They were toasting Prosecco glasses all over the EU, whatever the hell you call that thing. They were toasting Prosecco glasses over that. Definitely different, quarterly or monthly versus annually. But I don't know, man. I just think the whole commodity cycle to me is not over to the upside. I don't think, but I think it's more led by industrial metals than anything.
Yeah, no, and I agree with you, Bobby, just because the trend still seems intact. But when Carley talks, I listen to you, so it might cost me some puts to put it on some of these positions, which I think is very, very interesting. But I will say that the dollar, I still going to go back to this, and then we'll move on to something, whatever you would think that people like right now, that people should be looking at. But I will say the dollar thing, the fact that we look at it and it's the euro and the yen. I think the euro is the Europe is a museum, Japan is a prison, Japan's an old folks home, China's a prison. Where are you going to invest? But I do think if we kick in and have a big economic boom here, it could carry that trade. But let's move on to things that you do like, Carley. What do you like right now?
Oh man, that's a good question. Gosh, I am so pessimistic. I'm like such a Debbie Downer. We're kind of in a transition area. To be honest, the brokerage industry is trying to survive the metals fiascos. It's been a really crazy couple of weeks. So I haven't even gotten a chance to focus on what I do like. I will say, and this is kind of an old and boring market to even talk about, but I think U.S. Treasuries are something to keep an eye on. I've been saying that for a little while and they haven't budged. They're just trading sideways. But the reality is, like, if you're an investor and you look at the stock market, you see that everything's very high. Look at gold and silver doing what they're doing. The story is to store your money in Bitcoin or gold or silver or whatever it is. Nobody wants to store their money in treasuries. But in 2020, the narrative was the exact opposite. Central bankers, investors, everybody and their dog wanted to buy treasuries when they were yielding nothing. And everybody did so. And that actually ended up being the exact worst thing you could have possibly done in 2020. So 6 years later, everybody wants to buy gold, silver, Bitcoin, whatever it is. They don't want to buy treasuries. And I'm wondering if treasuries are the sleeper. They pay 5% for literally doing nothing. And unless the government defaults in the next 10 to 30 years, whatever duration you choose, you just sit back and collect. And the reality is, at some point between now and then, we probably get some sort of bump that causes appreciation in addition to any yield that you
get. I don't have a question because that was going to be my follow-up question. Is it buying it for just the rate right now or buying it for potential appreciation? And you think that that's the case too?
I think both.
Bobby, what do you say? What say you?
I was going to ask a different question.
Go.
If you don't mind, because I wasn't listening to that. Honesty is the best policy, James. I might like wheat. Have you looked at it all, Lisa? I think that it's been like grinding lower and it looks ready to break out to me. I'm not in it yet. But what do you think about wheat?
Thank you for saying that. Yes, I actually really love wheat. We have our clients long call options. And the reason the market's been grinding for years and it just hasn't been able to get out of its own way. So the great thing about it is the options are very, very cheap. So if you want to go long futures, you can buy cheap puts just to hedge yourself in case something weird happens. Because we know in this environment, just today soybeans rallied 40, 50 cents on some sort of off the cuff statement by Trump. So that's the hard part about commodities in this environment. Also, it just takes a tweet or a Truth Social or whatever to completely change the landscape. But you can get into wheat for very, very low risk. And I think $5 wheat's pretty cheap. We were just at 13 a couple of years ago, and everybody thought that we were going to start walking into grocery stores and not see bread or crackers on the shelf because we were out of it. Now we're just at the exact opposite of that scenario.
Bobby, yeah, I'm even looking at the continuous contract. I'm seeing May 28th, 2024 above $7.
Yeah.
I mean, that would be a pretty good trade. And that would just be a pullback to the 200 on the weekly, 200
so
a week.
Tell me this. So when you guys, like I look at this chart, I have it up. I have the 5-year of wheat. I like this trade just because I know exactly where my stop should be or exactly where my puts should protect me. That $5 level, 490 to 5. That you say $5, you say $500. What do we call that contract?
$5 a bushel.
$5 a bushel. So that $5 level, $4.90 to $5 seems like tremendous support. It's been hovering there for a year and a half. I have taken trades just because, okay, I think that's the level on the downside. So what would have to happen for wheat to have like a sustained move? Is it just, where's the demand going to come from? I'm celiac, so I don't eat wheat.
Yeah, I don't think it'll be a demand story. It's probably going to be a supply story, and it might be a freeze. Like we've had there was a little bit of a weather scare a week ago that triggered a little bit of a rally. So we need something weather related probably to get things going on the upside. Another one to look at is cotton. Cotton is in the same scenario. It's been trending lower and grinding.
What's cotton? Just see?
Near a multi-year low. And it's the same thing. You can buy cheap calls. You can buy futures and buy cheap puts. So it takes a lot of patience because it's been kind of lulling down here for a year or two, but eventually something's going to happen. And
what's the symbol for cotton? It's C space is corn. I just put that in. What's cotton?
It depends on the platform. Most of them is ECT or CTE, depending on what you're
CTE.
Probably ECT.
I'll try that. Bobby, what you ask a question while I'm doing this, will you?
Yeah, I wanted to. So something I talk to people about a lot, and Jimmy just kind of mentioned it and gave me an idea, and I want to get your opinion on it. I talk to a lot of retail traders. And one of the things I don't like is something that Jim does a lot, but Jim's not your average retail trader, right? Number one, he trades call spreads and put spreads a lot, right? So I think because he does that, what he just said doesn't apply to him, but it bothers me with retail traders. Jimmy will say, I like this trade because I know where my stop is, right? So the way that I envision that, Jimmy, correct me if I'm wrong, said, okay, I like this because I want to go long and I see where the stop is so I can buy a call spread. And a couple of days later, I know if I'm right or wrong and it's cheap, right? Whereas a lot of people do that with stocks. I talk to a lot of retail stock traders and they'll say, well, Tesla is at this price. If it goes $2 lower, I know I'm stopped out. So I might as well just buy it, as opposed to having an actual reason or a trigger, a technical price action trigger to go long. Do you come across that?
Yes, I do. And I talk to a lot of retail traders for a living. Some are my clients, some aren't. But I can tell you the conversations I have now are so much different than the conversations I had 10 or 20 years ago. Everything has become such an overwhelming narrative. Like people are on X or they ask AI, they ask Grok or ChatGPT or whatever, and they're getting spit out the same answers, told to buy the same things. And it makes sense. The AI is basically pulling data off the internet. So it's kind of like trend trading is what they're advising them to do. But I think the problem is it's luring people into products and markets they don't fully understand. For example, we're talking about wheat again. When wheat was at $13 after Russia invaded Ukraine, there were a lot of people out there that went into wheat ETFs because they've never traded wheat before. They didn't know wheat's not supposed to be at $13. They just think they're investing. And I think they've really blurred the lines between investing and trading. I think a lot of people are trading and they think they're investing. And at some point, the reality is going to hit. They've gotten away with it because a lot of assets have been kind of trending up overall because there's so much money in the system. But that's not going to be forever, or maybe it is. But I feel like there's a day of reckoning ahead of us at some point with that sort of mindset of just buy to go because it's going up.
Bobby, did you look at that cotton chart? Looks like death.
I didn't look at it. No.
Yeah, don't. It'll give you a nightmare. So the question becomes like cotton, corn, wheat, all these things just absolutely pummeled in a time where everything else was being debased. Like what? Like I just was at an agriculture conference 2 weeks ago and spoke there, but I don't try to speak to them about corn. I speak to them about macroeconomic stuff, and I intentionally don't. But what the hell? What's the story been? Are just these farmers too good at getting things out of the ground, and that's why there's an oversupply, or what?
That's part of it, but part of it is the government subsidizes a lot of what they call row crops or cash crops. So farmers are incentivized to grow the same 3 to 5 products, and they just keep doing it because the tax breaks are there, the subsidies are there, and if they don't make money, they sometimes get checks from the government. So they just keep planting the same things over and over, even though we have too much of it. And the problem is because of the oversupplies, it just keeps prices in the basement. So they're getting subsidies and tax breaks, but it's actually hurting them in the long run because it creates perpetually oversupplied markets. And it also creates a scenario where we as a country are searching for uses for this. For example, high fructose corn syrup is kind of the invention that came around because we have too much corn. Seed oils are here because we have too much soybeans. So there's a lot of consequences for these government subsidies, and one of them is very low prices. And it's hard to break that unless there's some sort of weather scare or war breakout or something really significant happening.
The too much corn is also where bourbon came from, which I know Carley knows. I want to read, if you let me, Jimmy. I've been lax on the comments here, and there's really no questions, but I'm just going to go through the comments real quick.
Sure.
First of all, our friend Remo says, hello, Carley, which was nice. That was a while ago. That was at 4:01. So it was early.
If you're still there,
Widge says, Warsh has spent the past dozen years criticizing QE. So if he wants to go lower on rates and bigger on QE, thinking balance sheet, I could support that so long as the inflation rate responds. Jimmy, stop me anywhere you want to.
Well, so one thing, because I know Widge that he's criticized QE, but
he's been a hawk.
We don't know how he's changed or what deals he's made to now be Fed chairman. So I don't know that it matters that he could criticize QE in the past. I actually think that he's not going to shrink the balance sheet. I think that every time we've tried to do that in earnest, there's been some sort of economic shocks. I think that, you know what I think, Widge? I think they're going to keep buying bonds. I think if the 10-year went to 460, 480 in that range, I think they'd start buying 10 years too. But I'd like to comment, Widge.
I got to tell you, I'm so glad you did that because I spent the last few seconds trying to get this name right. John the Recluse. If you look at the way that's spelled up there when Luis puts it up, I'm going John the Recluses. I couldn't really get it. John the Recluse.
John Ferry Clues.
John the Recluse. I bought silver years ago and I'm holding it still. And then physical bullion is the way to go. Tough luck for those who didn't buy and hold. That sounds like a recluse, if I have to say so myself.
You have guns in a bunker, John, too? Just kidding, because I'm all for guns in a bunker, but I have it too as well, John.
I have guns and I live in Florida, which is basically a state that's a bunker. And then Coach Freshwater, is anyone long rare earth?
By the way, Coach, how do we get long rare earths? What's the way to do this?
Yeah, if I had looking for example at
I have long lithium, by the way, but anyway, go on. Yeah.
No, on the rundown this morning, Carley, it's something we do before the show for Tradier, who sponsors this show. The rundown talked about XME. I think, is that right, Jimmy? I was thinking it was XME. Mm-hmm. And it's a metals ETF. And so before I did the rundown, I looked into what was in that. And it's gold, silver, copper, platinum, but also the different miners. And the things I never like about that is I remember looking at crude oil specifically, Jimmy, and I did a speech, I believe it was in Las Vegas in 2015 or so, talking about how crude oil had rallied and ExxonMobil and Valero did not, right? For whatever reason. And the thing you've both heard me say this a million times, the only thing that's 100% correlated to pick one, crude oil, copper, gold, is crude oil, copper, or gold. So I don't like looking at miners. And when Coach says long rare earth, he then put in USAR. So I'm going to pull up a chart of that as I'm saying this. USAR, I've never looked at this.
Oh, because that's the company, I believe that's the company that the government has a stake in now. So I bet.
Yeah, I think you're right.
I bet there's going to be a big jump when that was announced.
Yeah, but now look at it now. Luis, I'm going to put this up if you could. I'll put this up on the screen. Here's USAR. I don't like this chart at all.
Wait a
That's
sec. Why?
USAR.
It's above the 21. It's above the 8 and 21. They're all sloping higher. What don't you hate? What don't you like?
There's just no follow through. So
Okay.
gap higher, close lower, move higher, close lower, higher, close lower, higher, close lower, higher, close lower, higher.
Yeah.
Okay.
I get what you're
And
saying.
then close lower today.
Well,
Just the price
silver
action.
did that for 20 years before breaking out. So who knows?
What
Say
did
that again?
that?
Silver literally did that for like 20 years.
You had to have patience. You had to have the patience of a
Is there a
saint.
20-year call for this?
Yeah. But again, so the big spike higher, that big blue volume bar, that had to be when the government announced its stake in it. Again, this is just me talking out of my ass like I often do.
I think it's
That
probably
spike-
here because it was a
right,
couple
right
weeks
in
ago.
there.
Right?
3 days of up and then reversing it on the highs. First day was probably the people who knew and we didn't know, and then it followed through when the announcement was made. But
And look, I mean, this thing could rally. You know, it could go crazy in the next few weeks. I need to look at what's in it. You know,
Yeah.
if this is just a minor of rare earths, I don't. What is their CEO going to have an affair with an intern? I don't know. There's always things. I have problems with the companies when you could just do platinum, but I don't know the palladium.
the rare earths, we want molybdenum and or any other rare earth names I can't
I don't
pronounce.
invest in anything I can't say.
I know, but I think I nailed it, and I'm going to look at this, Coach, because I think that's interesting as a long-term hold if rare earths are as important. But again, I'm not buying it off this chart yet. I need to see some strength. So, what else you got?
I don't know. Feeder cattle. Have you looked at that, Carly? And I'm saying that unironically. I really like that chart.
Yeah, I do look at that often.
Being a carnivore, it's very big for me.
Yeah. And it's very expensive, right? The thing is, people that are eating high protein diets are not worried about price. And then rich people are not worried about price either. So the demand has just kind of been unwavered, even as prices go up. Someone in Vegas comes to buy a steak. They don't care if it's $80 or $200. They just pay it. And that's just how it's been going along. But I feel like at some point we're going to have some sort of supply shock. So far, the Trump administration's been focused on other things, but there's been a few times where they've mentioned that they don't like high beef prices and they're looking at potentially pulling back Brazilian tariffs, opening the Mexican border, that sort of thing. So I think it's just a matter of time before something surprises the market. But with that said, we might have a pretty good shot at retesting highs, maybe filling the gap, going a little higher. But somewhere between here and 380, if that's a feeder cattle chart, I would say if you made some money on the upside, make sure you protect yourself because this.
I've never thought of buying puts in this to, like hedge my dinner.
Absolutely. We actually have been buying live cattle puts. So not feeder cattle, but live cattle just because they're cheaper. You can buy August puts. They have 200 and something days to expiration. And you can spend anywhere from 700 to 800 and get basically where we were just a month or so ago in live cattle. So worth having a hedge out there if you're somebody that eats a lot of meat for sure.
Awesome. Bobby, do you mind closing this out if I run to basketball practice? My last one. This is it. This is the last Wednesday. I'll be leaving a little early for basketball practice. Carly, you are the best. Thank you. And hopefully you and Bobby have another couple minutes of a good talk.
Hey, buddy. So, Carly, if you could just go into what you mean by what the metals have done to the brokerage industry, because I think that's lost on a lot of people as to what exactly happened to you guys.
So, okay. So we're a futures broker. Futures are everybody's trading futures on leverage, which is good and bad. Not everybody understands how leverage works. And in this particular case, I think even people that understood leverage and have been doing this a while, like not rookies, really got caught off guard. For example, one gold futures contract from high on Friday, or maybe it was Thursday, to the low just recently was like 100 in 3 days. It moved $120,000 per one contract, which is really obscene. We've never seen that before, and it was really, really hard to manage for anybody, whether you were trading futures or options or what you were doing. Like we have a lot of clients that are trading option spreads and kind of hedging their delta with micro futures and things like that. I don't want to get too complicated, but when a market moves that hard and that fast, it's almost impossible to survive if you have any leverage at all. To give you an idea, we had clients that have been trading with us for 10, 15 years, large accounts, mostly held their own or made money during those periods. So not rookies, people that know what they're doing, and completely blew out their account in silver in a day and a half. And that's really,
Wow.
really, really hard to see. I mean, it's just honestly just painful. I really hate it. And it wasn't because they were over leveraged or doing something wrong or dangerous, although it turned out to be dangerous. But in silver, silver even had a bigger move than gold. So, for example, silver moved, I think, from high to low. It ended up being like $250,000 on one contract. And going into that chaotic episode, silver margin, I think it started at like at one point last year, silver margin was 10, 13,000. Now it's up to like 50, 60,000. But my point is, brokerage firms, I would assume we got lucky. We're going to survive, but I would assume there's probably a lot of little IBs and maybe even some big FCMs that took a lot of heat on their books, meaning clients lost more than what they have in their accounts, and that it becomes very, very messy. It's no fun for clients. It's no fun for brokers. And so it's been a tough couple of weeks for sure.
It's so strange. You don't think about that kind of thing when you see moves like that.
Yeah.
Right. And it's funny because for years I've been trying to tell people that, the CME group specifically, futures in general, they treat you like an adult, and you should remember that, right? This is not about making more. It's about being able to keep your money somewhere else, and you need to have it if you need it, if you're going to use that leverage. Is that hard to get through people's heads?
Yes, and thank you. And in many cases, I don't want to say it's not their fault. Everybody knows when they take a position what the leverage is. And we always tell them, if you buy or sell futures, it's unlimited risk. But the problem is a lot of these big moves are happening overnight. So even if they have money in an account somewhere else, they can't wire while the banks are closed. One of the silver move started at one point over, I think it was MLK Day weekend. We had some people that had money that they could have wired to hold their positions, but they couldn't wire. So there's all kinds of these things that really just exacerbate the situation. And I know a lot of people are probably thinking, well, don't you have stops? Stops are kind of a two-headed monster in any case, because a lot of times you get stopped out the high or low. And on days like this, imagine a trend trader, like for example, a trend following system that I just pay attention to. I'm not trading it, but I pay attention to it. I'll just start by saying this. Trend trading obviously can do very, very well in some periods of time. Right. But if you want to take gold, if you look over the last 5-6 years, this particular trend trading system would have basically gotten chopped out. $5,000 loss here, $10,000 loss here, 5 here, 5 here for 4 or 5 years. And then it finally caught this really big move in gold. And at one point the trade was up 80,000, but by the time it got stopped out, it was only up, I think, 18,000, which is still pretty good. But I'm just trying to give you an idea. Like if you have your stop too tight, there's a good chance it gaps through it, like over a weekend, or maybe the market's moving so fast. That happened, I'm sure, to a lot of people. Stops are not guarantees. People think that the markets are always going to be orderly and your stop is guaranteed, but it's not. They can get hopped over, especially if you're trading less liquid products like the mini, not the full size. So it gets complicated, but stops aren't guaranteed. And it's possible you have your stop in and it's deep because you're trailing it, but you give back 40 grand in half a day. Nobody wants to see that kind of stuff happen. It's really just hasn't. It's
interesting because this kind of thing does happen in stocks as well. But one of the funny things, Luis, if you could put this chart up, we have a newsletter, Unfiltered Investor, and myself and Mike Arnold do the trades. And one of our trades was Scott's Miracle Grow, and we bought it here January 2nd. So our original stop was a close below 56.50. With stocks, we always do close below, right? And we always try and let all the newsletter people know there's a reason why we do this. And you need to really make sure that you only get Reg T in stocks. So you need to really make sure that you have the capital, because it could go all the way down to $49, $48 before it stops out. This particular day, the 28th, it did this. And by the way, this dash red line is where we were trailing the stop up. So this would have been the close below stop. So it made this kind of a move all the way down and then ended up closing above it. And the very next day it rallied, and this is our last target on the trade now. So it happens all the time, and it's always a shock to people, which is kind of why I try to the reason I asked you that question, why I tried to say, is it hard for you to get that through people's head? Because I explain this all the time. We do this for a reason. And you need to actually look at risk first, and they don't listen. I mean, they never listen.
Sometimes
so I know you're talking directly to clients, so I'm sure they do. But in a newsletter format, they don't.
No. And, sometimes, to be honest, you have to experience it to fully understand it. And I think that was it. And just I'll mention one more thing that was totally crazy about this gold and silver move. We try to hedge positions with micros or long options, like I've mentioned before, but it got to a point where the option pricing was so wild. Like, for example, and I can't believe people were paying this, but in silver, an option that expired in 2 days that was like $30 out of the money was going for 10, 15 grand. Like crazy
What?
money. Yeah. Just crazy. And so it was impossible to do any kind of hedge. I mean, it was really just kind of a nightmare of a market. And I venture to say, I'm sure a few people made money, but we had people, we're a broker. We have people buying, selling, bullish, bearish. They're all over the place. And I can honestly say the people that were long ended up giving most of it back or losing. The people that were short didn't have a better time. So nobody, it's really a tough time for everybody. I'll just leave it.
Carley, thank you again for being here. It's really good to have a friend on the show every once in a while. I mean, consider ourselves friends with everyone that comes on the show, but we're actually friends, and I really enjoy that. And I will see you on April 14th, I think.
Yes, we'll see you in April. That'll be fun.
Yeah, we're going to be on the other side of my state here, Florida, doing a little joint speech there. So if you guys are in there, reach out to me. I'll tell you how you can join us. Anyway, thanks for being here. This was the Tradier Trader's Edge. Again, follow me and Jimmy, and follow Carley as well. Carley, what's your Twitter handle? I think we're going to put it up on the screen.
Thanks, Bob. It's at Carley Garner.
Okay. If you want to reach out to Carley, that's where we recommend you find her. Sometimes that's where I find her. So Carley, thanks for being here. This was the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.